Prices in Miami's luxury market have surged nearly 7% in just the past 6 months. But here's the catch. Some of the sharpest minds in real estate are quietly predicting a slowdown by the end of 2025. So is this the best opportunity of the decade, or are we staring down the barrel of a bubble? I was just on a call last week with a broker who's handled over $1 billion in sales across the US and Europe. She told me bluntly, "Emma, if investors aren't careful, they'll either miss the boat or end up underwater." In this video, I'm breaking down exactly where Miami's headed next. What's real, what's overhyped, and how you can position yourself smartly whether you're investing from London, Sydney, Toronto, or New York. If you're serious about high-end real estate, you'll want to stay until the end. Why Miami still leads the pack in 2025? Let's start with a question I often get from my clients in London and Toronto. They ask, "Emma, is Miami's real estate market still worth it, or have we missed the window?" Here's what I tell them. Miami isn't just riding a wave, it's redefining the shoreline. In the past year alone, Miami's median home prices have climbed between 6 to 7%, according to the latest NAR data. But what's truly remarkable is the luxury segment, where we're seeing deals close at lightning speed. One example? The 87 Park penthouse sale. It went for over $21 million, all cash. No contingencies. Closed in under 30 days. But why is Miami still this hot in 2025? Well, it comes down to 3 things: wealth migration, political influence, and tax advantages. Let's break that down. First, wealth migration. Over the last 3 years, we've seen a massive shift of high net worth individuals moving from cities like New York and Los Angeles to Miami. The pandemic may have sparked it, but what was temporary has become permanent. People aren't just buying second homes anymore, they're moving their entire lives here. Schools, businesses, you name it. Just last month, I had dinner with a client from Melbourne who relocated his entire family and company headquarters to Brickell. His words stuck with me. "Emma," he said, "Sydney will always be home. But Miami? Miami is opportunity." Second, political influence. With the Trump administration making South Florida something of a second White House, the area has become a magnet for political and financial elites. Whether you support that move or not, the economic impact is undeniable. Developers are seizing the moment, launching projects targeted directly at this new demographic. And third, taxes. Florida still has no state income tax. Compare that to London, where property taxes are climbing fast, or Toronto, where vacancy taxes are hitting investors hard. It's no surprise Miami remains a safe harbor. One of my colleagues, a top broker who splits time between Miami and London, told me bluntly last week, "Emma, clients from Europe don't need convincing anymore. They're already on the plane." The hidden risks investors can't ignore. Now, let's not get carried away with the sunshine and sales records, because beneath the surface, there are risks that could catch even the savviest investor off guard. First, interest rates. I've been speaking with analysts from both JP Morgan and Wells Fargo. Consensus is rates will stay between 6 and 7% through 2025. That's not sky high by historical standards, but it's a psychological hurdle. And it's slowing down certain types of buyers. For example, homeowners with existing 2 to 3% mortgages are sitting tight. They're not listing their properties unless they absolutely have to. That's why inventory is tight in some areas but soft in others. Second, condo fees are creeping up fast. Older condos, especially those 15 to 20 years old, are facing increased maintenance costs and hefty special assessments. Just 2 weeks ago, a client of mine from Vancouver was hit with an unexpected $180,000 special assessment on a waterfront unit in Sunny Isles. He thought he was buying a turnkey investment. Now he's dealing with construction noise and additional costs for the next 18 months. Here's the thing, it's not just the old buildings. New legislation is requiring stricter maintenance standards, pushing up costs across the board. Third, we need to talk about oversupply, at least in some segments. There's a surge in short-term rental properties being marketed as high-return investments. But higher carrying costs, rising competition, and stricter regulations are making it harder for these units to pencil out. One client from Manchester bought 2 units in downtown Miami, planning to run them as Airbnbs. 6 months in, he's struggling to keep occupancy rates high enough to break even. His exact words? "This isn't passive income. It's a full-time job." Where the smart money is moving in Miami, So where are the pros putting their money? The answer is clear. Ultra-luxury, end-user waterfront properties. These are not your average condos. We're talking 5,000 plus square feet, private elevators, direct ocean views, and amenities that rival five-star resorts. And guess what? There's a shortage. At the Paragon Miami Beach, 70% of units are already under contract, many with international buyers. The developer I spoke with last month told me they could have sold out twice over if they had more inventory. But it's not just about flashy buildings. Neighborhoods like Coconut Grove and Edgewater are evolving. Coconut Grove is seeing a revival with boutique developments that offer privacy and exclusivity. A family from Sydney recently closed on a $6 million home there. They wanted walkability, parks, and a community vibe, and they got it. Plus, their home has already appreciated by 8% in the last 9 months. Edgewater, once overlooked, is now a hotspot. New developments are attracting young professionals and tech entrepreneurs relocating from San Francisco. One of my clients, originally from New York, picked up a pre-construction unit at Missoni Bahia for $2.7 million. 6 months later, similar units in the building are listing for $3.2 million. And if you're looking for long-term upside, pre-construction opportunities offer significant advantages. Lock in today's pricing, benefit from appreciation during the build-out phase, and avoid some of the immediate carrying costs. But, and I say this with experience, choose your developer carefully. Not all projects are created equal. I had a deal fall apart last year because the developer couldn't secure financing and the project was delayed indefinitely. Do your due diligence. The global investor's perspective should you jump in. So let's zoom out for a second. Whether you're watching this from London, Sydney, or Toronto, the question is the same. Why Miami? And why now? Let me tell you what I told a client from Calgary last month. He was weighing Miami against an investment in Vancouver. I said, Miami offers something very few cities can right now. Strong capital appreciation potential, favorable tax laws, and a lifestyle that attracts global wealth. Compare that to London's stagnant growth, Sydney's affordability challenges, or Toronto's cooling market due to regulatory changes. For foreign investors, especially those in the UK and Australia, Miami is offering real value. A $10 million penthouse in Miami Beach rivals what you'd pay for a modest luxury home in Kensington or Point Piper. And beyond price, there's momentum. Miami is evolving into a global hub, not just for vacationers, but for permanent residents, businesses, and institutions. I've worked with clients who relocated entire operations here because the business climate is so favorable. But be clear-eyed. The opportunities are real, but the pitfalls are too. You need local expertise, solid legal guidance, and a clear strategy. I always advise clients, don't just buy what's hot. Buy what holds value 5, 10, 20 years from now. Final insight, before we wrap this up. In a nutshell, Miami is still the rising star of global real estate in 2025. But the winners will be the ones who understand the dynamics behind the headlines, are willing to pay for quality, because in this market, quality always wins. We work with people who tell them what they need to hear, not what they want to hear. Final insight, before we wrap this up. Continued. I've spent the past few months digging deep into Miami's numbers, walking properties with clients, and sitting across the table from developers who've built some of the most iconic projects in the city. And here's what it boils down to. The opportunities are real, but so are the risks. And if you want to be one of the investors who looks back in 5 years and says, I made the right move, you need to start laying the groundwork now. That brings me to the key takeaways from today's deep dive. Key takeaways for smart investors in 2025. First, Miami's luxury and ultra-luxury markets are still showing strong, sustainable growth, particularly in waterfront and end-user properties. If you're looking for stability and long-term value, this is where the smart money is going. Second, interest rates aren't dropping anytime soon. Plan your financing accordingly. If you're expecting 3% mortgage rates again, you're going to be disappointed. But 6% to 7% is the new normal, and savvy investors are already adjusting their strategies. Third, rising condo fees and special assessments are reshaping the landscape, especially for older properties. If you're investing in condos, do your homework. Understand the building's financials and get ahead of any potential surprises. Fourth, Pre-construction developments are offering early entry points, but you need to choose your projects and your developers carefully. There's room for significant upside here, but not every shiny new building is a smart buy. And finally, Miami isn't just for American investors anymore. Whether you're in London, Sydney, Toronto, or New York, Miami offers something unique. Global appeal, strong rental demand, tax advantages, and an enviable lifestyle. As I often tell my clients over coffee, you're not just buying property here, you're buying into an entire ecosystem of growth. What should you do next? So here's the question I want to leave you with today. Are you positioning yourself for long-term security and growth? Or are you waiting on the sidelines while others make the moves? If you're serious about real estate investment in 2025, Miami needs to be on your radar. But more importantly, you need a strategy tailored to this market, whether that's targeting specific neighborhoods like Coconut Grove and Edgewater, or securing your position in an exclusive pre-construction deal. If you're watching this and thinking, this sounds like something I should explore, then don't wait until prices rise another 5% or inventory dries up. Because in real estate, timing isn't everything, but it's close. Before you go, here's what I recommend. Hit that subscribe button right now and turn on notifications. I share weekly insights on the most profitable real estate markets worldwide, updates you won't find anywhere else, and they could be the edge you need to stay ahead. Drop a comment below. Which market are you currently investing in? Are you considering Miami for 2025? I read every single comment and I'm here to answer your questions. Whether you're buying your first luxury condo or adding to your portfolio, let's have that conversation. And if you found this video valuable, give it a like. Not because it makes me feel good, although it does, but because it tells YouTube this is content that needs to reach other serious investors like you. Remember, in real estate, and especially in Miami, the early movers set the pace. The question is, are you ready to move? Thanks for watching EstateScope. I'll see you in the next video.